what if the money you trust most is only safe on paper? Behind the polished language of offshore protection and global banking security lies a far more aggressive reality, one where wealth is no longer just stored, but tracked, pressured, and strategically controlled. In today's world, money does not simply move across borders freely. It moves through filters of sanctions, surveillance systems, tax treaties, and political alliances. Entire economies can now be pressured, not with armies, but with access restrictions, frozen accounts, and digital financial isolation. Offshore havens were once seen as the ultimate financial escape, quiet jurisdictions where capital could breathe away from government reach. But in a world of economic warfare, even these havens are no longer invisible. They are mapped, monitored, and increasingly integrated into global enforcement networks. So the real question is no longer whether offshore finance works. It is whether any system in the global economy can still guarantee safety when money itself has become a weapon. And if financial warfare is already here, then the biggest risk is not where your wealth is stored, but who can decide whether it stays accessible tomorrow. Offshore havens and economic warfare are two powerful forces shaping the modern financial world, and most people never realize how deeply they influence the safety of their wealth. When global tensions rise, governments, corporations, and high-net-worth individuals begin shifting money across borders, seeking protection, secrecy, and advantage. Offshore jurisdictions promise low taxes, legal flexibility, and confidentiality, making them attractive destinations for capital flight in uncertain times. However, beneath this surface of financial efficiency lies a complex battlefield where states compete using sanctions, regulations, currency controls, and data surveillance. Economic warfare is no longer fought only with tariffs and trade barriers, but through targeted financial pressure that can freeze assets, disrupt banking systems, and reshape global trust. In this evolving landscape, the question arises whether offshore havens truly protect wealth or merely delay exposure to expanding forms of economic conflict. To understand this tension, it is important to recognize that offshore finance is not inherently illegal or secretive, but rather a system built on differences between national tax laws, regulatory frameworks, and sovereignty. Countries like Switzerland, Cayman Islands, Singapore, and Luxembourg have historically positioned themselves as financial intermediaries, offering stability, privacy, and legal predictability. For investors, this creates opportunity, but for governments, it raises concern about tax erosion, capital outflows, and loss of economic control. In response, many powerful states have begun tightening financial transparency rules, implementing global reporting standards, and pressuring offshore centers to comply with international regulations. This creates a constant push and pull dynamic between privacy and transparency, between mobility and control, between individual strategy and collective regulation. Meanwhile, economic warfare continues to evolve through sanctions that isolate countries from global banking systems, through restrictions on dollar access, and through digital monitoring of cross-border transactions. These tools are designed not to destroy economies outright, but to influence behavior, alter policy decisions, and reshape geopolitical alliances. As a result, wealth has become increasingly mobile, yet also increasingly vulnerable to political decisions beyond the control of any single investor. The illusion of safety provided by offshore structures must therefore be evaluated against the rising sophistication of state-level financial intervention. Ultimately, the stability of offshore wealth depends on trust in legal systems that can change rapidly under political pressure and international negotiation. This means investors must constantly assess not only financial returns, but also geopolitical risk exposure and regulatory uncertainty. In many ways, offshore havens act as mirrors, reflecting the imbalance between globalization and national sovereignty in the modern economy. They offer flexibility, but also exist within a system increasingly shaped by coordination between major economic powers seeking to limit tax avoidance and illicit flows. The future of offshore finance will likely depend on how effectively these competing interests are balanced across jurisdictions that no longer operate in isolation. Investors, governments, and institutions all play a role in shaping the rules that determine where wealth can move and how it is protected, and whether offshore havens remain safe in an era of escalating economic warfare worldwide, intensifying global uncertainty. Global finance today operates less like a free market and more like a strategically contested infrastructure, where money movement is continuously observed, influenced, and sometimes restricted. Offshore havens emerged historically as neutral zones within this system, offering legal arbitrage opportunities that allow capital to move beyond the immediate reach of domestic taxation. But neutrality in finance is increasingly under pressure as geopolitical blocs form and economic alliances begin to dictate financial access rules and compliance expectations. One of the central drivers of this shift is the expansion of coordinated financial surveillance among major economies through information sharing agreements and compliance frameworks. These systems reduce anonymity and increase traceability, making it harder for capital to remain hidden without regulatory visibility. As a result, offshore centers must now compete not only on tax advantages, but also on credibility, transparency, and integration with global banking systems. At the same time, economic warfare has become more precise and technologically advanced, relying on financial choke points, such as correspondent banking networks and reserve currency dominance. When a state is targeted, sanctions can restrict access to payment systems, freeze foreign reserves, and limit participation in global markets. This creates a form of pressure that can be more effective than traditional military force because it directly affects liquidity and operational capacity. For individuals and corporations, this environment introduces a new type of risk where asset safety depends not just on jurisdiction, but on geopolitical alignment. Even legally compliant offshore structures can become vulnerable if the jurisdiction hosting them falls out of favor with dominant economic powers. This dynamic forces wealth holders to diversify not only assets, but also legal frameworks and banking relationships across multiple regions. However, diversification itself is becoming more complex due to increasing harmonization of tax reporting standards across countries. Programs like automatic exchange of financial information have reduced the effectiveness of secrecy-based offshore strategies. This does not eliminate offshore finance, but transforms it into a more regulated and transparent ecosystem. Within this ecosystem, the advantage shifts from secrecy to sophistication, where legal structuring and compliance expertise become key differentiators. At the same time, governments face their own pressures as they attempt to prevent capital flight while still attracting foreign investment. This leads to a competitive regulatory environment where countries must balance enforcement with attractiveness. Economic warfare further complicates this balance by turning financial systems into extensions of foreign policy tools. As financial sanctions become more frequent, their long-term impact on trust in global banking networks becomes increasingly significant. Trust, once broken, is difficult to restore, and this creates structural uncertainty, even for well-regulated jurisdictions. Investors must therefore consider not just current legal protections, but also the stability of those protections under future geopolitical stress. The perception of safety in offshore havens is therefore conditional and time-sensitive, rather than absolute. In this environment, wealth preservation becomes a dynamic strategy, requiring continuous monitoring of international relations, regulatory shifts, and systemic financial risk exposure. The evolution of offshore finance cannot be separated from the broader transformation of global power structures over the last few decades. As trade and capital flows expanded across borders, financial systems became deeply interconnected, creating both efficiency and vulnerability within the same networks. Offshore jurisdictions originally functioned as pressure valves, allowing capital to escape rigid domestic constraints and enabling global liquidity to expand. However, this same flexibility created opportunities for tax avoidance, regulatory arbitrage, and in some cases, illicit financial flows that drew increasing scrutiny from regulators. In response, international organizations began coordinating efforts to standardize financial reporting and reduce opacity across banking systems. This shift marked the beginning of a new era, where financial sovereignty was partially shared across multinational agreements rather than fully controlled by individual states. Economic warfare intensified this transformation by demonstrating how financial systems could be weaponized without direct military confrontation. Sanctions regimes expanded from targeted individuals to entire sectors and national economies, affecting energy exports, banking access, and foreign investment channels. This expansion revealed the extent to which modern economies depend on a small number of critical financial infrastructures, such as clearing systems and reserve currencies. Offshore havens exist within this architecture, and therefore cannot remain fully insulated from its pressures. Even jurisdictions that maintain strong legal autonomy must still interact with global banking networks that are subject to external influence. As a result, the idea of complete financial privacy has become increasingly theoretical rather than practical in most cases. Instead, what exists is a layered system of partial transparency, where some information is visible to authorities, while other aspects remain obscured within legal structures. This system allows for continued offshore activity, but under significantly tighter constraints than in previous decades. The balance between enforcement and freedom in financial systems is constantly shifting depending on political priorities and economic stability. During periods of global tension, enforcement tends to increase as governments seek to secure revenue and control capital movement. During periods of stability, regulatory pressure may ease slightly to encourage investment and liquidity flows. This cyclical pattern creates uncertainty for wealth holders who must adapt strategies across different geopolitical conditions. At the same time, technological advancements such as digital banking, blockchain monitoring, and artificial intelligence-driven compliance tools are reshaping financial oversight. These tools increase the speed and accuracy of regulatory detection, reducing the effectiveness of traditional offshore concealment methods. However, they also introduce new questions about data privacy, jurisdictional authority, and financial autonomy in a digital age. Economic warfare leverages these technologies by applying financial restrictions with unprecedented precision and scale. This raises fundamental questions about the future of sovereignty in a world where financial systems are deeply integrated and constantly monitored. Offshore havens therefore exist not outside the system, but as specialized nodes within a global network of competing interests and regulatory forces. Modern offshore finance is increasingly defined by adaptation rather than secrecy, as global regulatory pressure reshapes how capital moves across jurisdictions. The traditional image of hidden accounts and opaque trusts has evolved into a more sophisticated system of compliance-driven financial engineering. This shift has been driven largely by international cooperation among major economies seeking to close loopholes that enable tax erosion and illicit capital flight. At the same time, economic warfare has expanded beyond traditional sanctions into broader financial influence operations that target liquidity flows and credit access. These mechanisms can destabilize entire economic sectors without requiring direct military intervention or physical confrontation. For offshore havens, this means that survival depends on integration rather than isolation within global financial systems.
Jurisdictions that once relied on secrecy now compete on regulatory credibility, banking infrastructure, and treaty participation. This creates a paradox where greater transparency becomes a requirement for continued participation in global capital markets. Investors operating within offshore frameworks must now navigate complex compliance environments that vary across multiple overlapping legal regimes. This increases transaction costs, but also reduces legal uncertainty in many cases. However, the reduction in uncertainty is not uniform and depends heavily on geopolitical alignment and diplomatic relations. Economic warfare introduces additional layers of unpredictability as financial systems become tools of strategic pressure between rival powers. Currency dominance plays a central role in this process, particularly through the influence of reserve currencies on global trade settlement systems. Control over payment rails enables states to enforce sanctions and restrict access to international liquidity pools. This power dynamic places offshore havens in a vulnerable position despite their legal independence. Even highly reputable financial centers must ensure alignment with dominant regulatory frameworks to maintain access to global capital markets. Failure to comply can result in exclusion from critical banking networks, which effectively isolates a jurisdiction economically. This creates strong incentives for convergence in global financial standards, even among historically independent jurisdictions.
For investors, this convergence reduces opportunities for regulatory arbitrage, but increases systemic stability in some areas. Nevertheless, systemic stability does not eliminate geopolitical risk, which remains embedded in financial infrastructure itself. Wealth preservation strategies, therefore, increasingly focus on multi-jurisdictional diversification combined with legal compliance optimization. This approach acknowledges that no single offshore structure can guarantee absolute protection in a globally interconnected system. Instead, resilience is achieved through distribution of risk across multiple financial centers and asset classes. The role of trust becomes central as financial systems rely on institutional credibility and cross-border cooperation. When trust erodes due to sanctions or financial disputes, the ripple effects can extend far beyond the targeted jurisdictions. This interconnectedness means that offshore havens are no longer isolated shelters, but active participants in global financial stability mechanisms. The perception of offshore havens as safe zones for wealth is increasingly challenged by the realities of global financial interdependence. While these jurisdictions still offer advantages in taxation and structuring, they operate within a tightly regulated international environment. This environment is shaped by coordinated policies aimed at increasing transparency and reducing opportunities for hidden capital movement. Economic warfare reinforces these trends by demonstrating how financial systems can be leveraged as instruments of geopolitical strategy. Sanctions, financial restrictions, and asset freezes have become common tools used to influence state behavior and corporate decision-making. These tools rely on the interconnected nature of global banking systems, which allows pressure to be transmitted across borders almost instantly. For offshore jurisdictions, this creates a structural dependency on compliance with larger financial networks dominated by major economic powers. As a result, independence is limited not by law, but by access to infrastructure, such as clearing systems and correspondent banking relationships. Without these connections, even the most stable offshore center risks financial isolation. This reality has led to a shift in how wealth preservation is conceptualized by investors and institutions. Instead of seeking secrecy, many now prioritize resilience, liquidity, and cross-border flexibility within transparent legal frameworks. This marks a significant departure from earlier offshore strategies that emphasized concealment and regulatory avoidance. At the same time, digital transformation of financial systems has increased the ability of governments to monitor and analyze capital flows in real time.
Advanced data analytics and artificial intelligence tools enable rapid detection of suspicious transactions across multiple jurisdictions. This reduces the effectiveness of traditional offshore anonymity strategies and increases compliance expectations for financial intermediaries. However, it also improves systemic stability by reducing the prevalence of opaque financial networks that can contribute to instability. The trade-off between privacy and security remains a central tension in global finance. Economic warfare intensifies this tension by introducing strategic considerations into what were once purely financial decisions. For example, access to currency networks or international payment systems can be restricted based on political alignment rather than economic performance. This introduces a layer of uncertainty that cannot be mitigated solely through financial planning or diversification. Investors must therefore integrate geopolitical analysis into their wealth management strategies more deeply than in previous decades. Offshore havens remain relevant in this context, but their role has shifted from secrecy hubs to compliance-optimized financial intermediaries. Their survival depends on their ability to maintain credibility within global regulatory systems while still offering competitive advantages. This dual requirement creates continuous pressure for reform and adaptation within offshore jurisdictions. The result is a more transparent, but also more constrained global financial ecosystem, where mobility exists but under structured oversight. Wealth is no longer simply stored or hidden, but actively managed across complex legal and geopolitical landscapes. The future of offshore finance will be determined by the ongoing balance between global cooperation and strategic economic competition. As nations become more interconnected financially, they also become more capable of influencing each other through non-military means. This creates a system where economic warfare and financial integration coexist in a constant state of tension. Offshore havens sit at the center of this tension, acting as both facilitators of global capital movement and subjects of increasing regulatory scrutiny. Their long-term viability depends on their ability to adapt to evolving standards of transparency, compliance, and international coordination. In the coming years, we are likely to see further convergence in financial reporting systems driven by technology and policy harmonization. This will reduce the availability of unmonitored financial channels, but increase the predictability of global capital flows. At the same time, geopolitical fragmentation may create parallel financial systems where different blocs enforce distinct regulatory regimes. In such a scenario, offshore jurisdictions may be forced to align more closely with specific economic alliances rather than maintaining broad neutrality. This shift would fundamentally alter the role of offshore finance in global wealth management. Instead of acting as neutral intermediaries, they may become extensions of regional financial ecosystems. Economic warfare will continue to evolve alongside these changes, using increasingly sophisticated tools to influence capital allocation. Cyber financial operations, digital currency controls, and automated compliance enforcement may become standard instruments of economic policy. These developments will further reduce the separation between financial systems and state power. For investors, the concept of absolute safety in wealth storage becomes increasingly outdated. Security will depend on adaptability, diversification, and continuous reassessment of geopolitical conditions. Offshore structures will still play a role, but as part of a broader integrated strategy, rather than standalone solutions. The key challenge will be balancing efficiency, privacy, and compliance in a world where these objectives often conflict. Trust in financial institutions and legal systems will remain the foundation of global capital movement. When that trust is strong, wealth flows smoothly across borders, but when it weakens, restrictions and fragmentation increase rapidly. Ultimately, the question is not whether offshore havens can guarantee safety, but how they can function within an evolving system of economic influence and control. The answer lies in recognizing that wealth protection is no longer a static condition, but a dynamic process shaped by global politics, technology, and regulatory evolution. In this environment, every financial decision becomes part of a larger geopolitical equation, where economic warfare and offshore finance continuously redefine each other.
In the end, offshore havens are not disappearing, but their meaning is changing. They are no longer secret exits from the system, but regulated nodes inside it. And like every node in a global financial network, they depend on trust, cooperation, and political stability far beyond their borders. Economic warfare has rewritten the rules. Wealth is now influenced not only by markets, but by geopolitics. Not only by interest rates, but by alliances and sanctions. Not only by strategy, but by access. This means the idea of absolute safety in wealth is becoming outdated. There is no jurisdiction, no bank, and no structure that exists completely outside the reach of global financial power. What remains is strategy, diversification, adaptability, and awareness of how quickly financial conditions can shift when politics and money collide. Because in this new era, the real protection of wealth is not secrecy or location. It is understanding the system you are already inside.